Hello guys, how's it going? So let's just do a quick total crypto market cap analysis for today. I'm looking at the 8 hour time frame right now, and it looks like we are still in this big consolidation. Could even go further down. We could say from here to here, we are literally in a consolidation. And during consolidations, there's a lot of volatility, there's a lot of ups and downs, very unpredictable price action. That's why we as traders we find it very difficult to trade in consolidations. That's why we always want to be buying low during consolidations and selling high. Because I have a spot strategy, I'm not selling in the market, I'm not shorting the market because you have to leverage to short the market. So I always look for buying opportunities, and the best places to buy usually are at the bottom of the consolidations. Okay, if we look at the total right now, I'm going to analyze it right from the beginning when we start first consolidating. So we had this liquidity build up here. Let me try and change this to a lower. We had this liquidity build up here, okay, that hasn't been tapped into yet. All right, but I think eventually we will be tapped into it again. And we had a run up here. We created higher lows, and then we had a massive run up here, build a lot of liquidity in this area, okay, and the market makers consolidate the price here, and then they smash the price down into the liquidity they built. This became a demand zone here, where price previously rallied up, and when that liquidity was taken, price was forcefully pushed back to the upside again, and once again the market makers aggressively sold off crypto and pushed price back into that demand zone where price previously broke out. They created equal lows. Okay, if you look very closely here, these two areas are equal to each other. So the market makers set liquidity so they can come back to it at a later stage. Okay, and then price was aggressively again pushed to the upside over here, consolidated, higher low, pushed up, and then they created equal highs in the market. So this was like a consolidation pattern in this area. We created equal lows, we created equal highs, and then the market makers came down, they created another equal low, created even more liquidity for them to come and take at a later stage. And then they pushed price back up. They took out the liquidity at the top. They filled the gaps in the market. In these candles, there was gaps in the market that needed to be filled. And then after that, once that liquidity was taken and that gap was filled, they pushed price down very aggressively. They created equal lows again. They set more liquidity in the market. They manipulated more buyers into this area so they can come back and take that liquidity right there. So all those equal lows, there were buyers in these areas leveraging positions. They had stop losses below their buy. So imagine I had a buy, for example, here, right? My stop loss would have been like here, right? If I had loads of buyers, would have been here in this area, like so, like so, like so. This is just examples, right? And they had their stop losses right below their trades. And what the market makers did, they knew that there were traders here, and they knew that they needed their liquidity in order to push back price back up again to make a profit. And that's what they did. They took out the liquidity right at the top of the 3 trillion area. If you look very closely here, right there. Oh God, where's my price? There it is. If you look right there, there was 3 trillion, and we were literally right above that 3 trillion mark. 3.3 trillion. They came and retested that 3.3 trillion right above 3 trillion. It's like the set liquidity again in this area. By making a move like that, they again set some liquidity so they can come back to at a later stage. So they created equal lows again in this area right there, right at the top of the previous all-time high. So we are still at the top of the previous all-time high. Okay, we broke out, we're still consolidating above it. And what's happened after that? After once they came back to the 3.03 trillion area, they aggressively pushed price back to that supply zone where they previously sold off the first time. So they sold off price in this area and they came back to it again. And now what we're seeing right now is a strong rejection of this area, as you can see from the volume. And buyers are also trying to push price up again. So there's like a tug of war in this area. So imagine you have a rope and you have buyers on this side and you have sellers on this side, and they're all pulling in their own direction. That's what's happening here. We have buyers and sellers fighting to win this area. So we have consolidation, and I can also see a trend line forming in this area as well. So we have some sort of trend line in this area. So usually when I see trend lines, I want to see a few bounces up that trend line. So we got one bounce, we got a bounce here, we got a bounce here. We could potentially get another bounce here back to the daily close. So this was when the day started today, and we are below that day right now. We are below the daily close right now. So we are looking bearish right now. But what's really giving me some interest is that there's low volume in this area. So if they want to really push the price down, they need to, in my opinion, bring the price up to grab some sort of liquidity in this area and then push price down, in my opinion, because there's just not enough volume to do that kind of action, in my opinion. And if you go on the 1 hour as well, we can see that there's so much liquidity built up in this area as well. If you look down there, we got equal highs here. First of all, we got equal highs. We got liquidity here in this area. So in my opinion, for them to push price further down, they need to set some sort of liquidity here first, and then aggressively push price up into this supply zone. This is an hourly supply zone here, right there. And then they could aggressive push price back up, back down again to take out that 3 trillion area here that I showed you, and potentially take out that liquidity as well. There's a lot of areas that demand in this area as well. So we could go back down to these levels again in order to push back up again. This is healthy price action. It's needed. If you want price to rise again, you need to go down sometimes and retest some areas that liquidity exists and there's buyers there which could be taken out. Okay, but that's my analysis right now for total. Let's have a quick look for UFD as well, and see what's going on with that one. So UFD, let me just take off my deltas for this. So UFD, let's look at it on the 8 hour. There is some data missing because I'm looking at this on the Mexi exchange. So there's data missing here that we had previously, but it's okay. You can see that on Dexus. You don't really need it. So we bought UFD at these areas, right? We accumulated, and then we pushed price up. We created equal highs. We gave equal lows in this area, which was very interesting. We didn't really take too much liquidity in this area. And then the price was aggressively pushed up, high demand. You can see from the volume, high demand. And we create equal highs again. And then we started consolidating in this area. We pushed up, we created new highs, and then aggressively from the volume, push down. Now we are in this kind of consolidation zone. So if you can draw something like this, we are literally just consolidating, and we are prices is bouncing off this trend line. So if I put my deltas back on, which are the daily support and resistance areas that I've drawn out, and I put a box around them, we can see that right now, as I said, we're bouncing off this trend line, and we could potentially pull back as well. So as the total pulls back, we could pull back on UFD as well, take out some liquidity, and then get back into the 180 zone, or potentially even the 150 zone. And if worst case scenario, if the market is really bad and we go towards that 3 trillion liquidity, the liquidity below the 3 trillion, we could potentially even come back and retest that equal low that we saw in this area as well, and we could even go back to the 100 million area, which is a very, very good area to get in a discount, no financial advice, but I'll be loading up hard if it goes back to the 100 million again, because the risk to reward will be top notch. So let's see what happens today, guys. All right, I'm very eager to see. We also got some fundamental news for the US dollar as well, and which could impact crypto. We got unemployment claims. The forecast is really high for the dollar, so we could potentially see a weaker dollar. But obviously, the market likes to manipulate people, so I don't think these are the real figures that you're going to see. And also, President Trump apparently is going to be speaking, so he could potentially say some bad things about crypto, like Gary. What was that guy's name again? The chairman of the Federal Reserves. I forgot his name. Not Bailey. Powell, Jeremy Powell. He could say some shit again about crypto, and we could go down again. So who knows, man? Anything could happen in the market. It's very you can't, as I said before as well, you can't predict the market at all. It's very unpredictable. Very, it does its own things. We just have to observe and act on these sensitive levels. We just have to find these sensitive levels and see what the market's showing us and act accordingly. All right, guys, that's enough for me today. Thank you very much. Have a great day, guys. All right, let's get this money, baby.